Good morning, everyone. This is Marshall Gidler bringing you the morning comment for April 21st. The Greek government Monday decreed that state bodies must transfer any cash reserves they have to the central bank for the state's use. This should bring in enough money to allow the government to pay civil servants' salaries and pensions this month. After that, the government's hoping that Eurozone finance ministers meeting on May 11th will release enough money to allow the government to repay the IMF the next day. Nonetheless, things will still be tight during May, and the debt repayment schedule is even heavier in June. Even before that, though, I wonder what people's reaction to the move will be. Ordinary citizens may see this as the first step towards capital controls and confiscation of their bank accounts, as happened in Cyprus. I mean, what would you do with your money if you lived in Greece? I expect that this will simply hasten the outflow of funds from Greek banks and the collapse of the banking system. ECB Vice President Constancio yesterday made the situation even worse, in my humble opinion, by pointing out that the ECB rules allow it to supply funds only to banks that are solvent. A couple of the major banks in Greece are trading at slightly more than 20 cents a share. 20 cents. Do you think they're solvent? The Greek situation seems to be heading towards a conclusion after all this, so even if the market expects a successful conclusion, which personally I do, it has to price in at least the possibility of a disaster. I expect that possibility to weigh increasingly on the euro until the uncertainty is over. Now, the Australian dollar did well after China cut its reserve requirement ratio yesterday, but that proved to be the high point, and the currency was the biggest loser among the G10 over the last 24 hours. RBA Governor Stevens, speaking in New York, reminded people that further policy easing is on the table. And he said he thought the Australian dollar, quote, will very likely fall further yet over time, unquote. Now, this is only repeating what the RBA has already said. Nonetheless, it reminded everyone of this fact and helped to weaken the currency. I agree that the Australian dollar is likely to weaken, especially as Chinese growth slows, and also expects Aussie to weaken further. Note that Kaisa Group Holdings Limited, a Chinese real estate developer, missed $52 million in interest payments yesterday. Who's next? The calendar is relatively light today. During the European Day, the main event will be the ZEW survey for April. This could be the 6th consecutive month of an increase, which would confirm that Germany, Europe's growth engine, is gaining steam. In such an event, Eurodollar could rebound a bit, but any bounces are likely to be short-lived and provide renewed selling opportunities. In Sweden, the official unemployment rate for March is coming out. As for the speakers, we have Riksbank Deputy Governor Henry Olsen and the ECB's Noyes speaking. Canada's finance minister will deliver the government's long-delayed pre-election budget. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Gidler, head of Global FX Strategy at IronFX Global, wishing you solid trading.